listeners can just come. No. Yeah, that's what you did. Trying to give it another go?
Yeah.
Okay, let's go.
All right.
Morning, Matt.
Good morning. How are you?
I'm great. 9:30 this morning. It's an early one.
Friday morning.
Yeah.
Starting, ending the week off great.
That's right. That's right.
Yeah.
No beers this morning.
Oh no, we
Decided it was a bit too
little
early.
energy drink there
Little prime.
to keep us primed for the podcast.
$9.99 for a case of 18 at Costco right now.
That's
So-
a deal.
It is.
That's
If you
a
look
deal.
at Celsius, Alani's, they're all $29.99 for 18. So
I mean, for the amount of energy you're gonna get from it, that's a good investment.
it's the same.
I would go as far as to say it's a.
That's right.
It's kind of an asset there.
Pretty much.
Kind of an asset.
Oh, yeah. Let's go.
Asset Ambitions podcast. We got our banner now. Fresh.
Woo!
We got a background to our podcast. Doing social media accounts.
Oh,
It's
we're
going great. Moving forward.
learning as we go.
Oh yeah, we've
It's not
uploaded a
easy.
couple of shorts.
Yeah, we uploaded.
They're doing
Well,
good.
not shorts. We're not on. We didn't post on YouTube yet. We posted on Instagram, TikTok mainly. We're gonna start going on Facebook. We'll be on everything. You'll be able to search us up on everything. Have our reels, our clips, full episodes on the platforms that we can post full episodes. So I'm very excited to see where it's gonna go. Very excited to start posting and being more regular on the postings, not just whenever I feel like it.
Yeah.
So
It
we're
go-
working on a schedule.
It can only go uphill from here.
That's right. Learning as we go, like I just said, and very excited.
That's it.
Yes.
So what do we have planned for this podcast?
For this podcast, it's going to be a bit different than what we usually do. Usually we just have a conversation and go back and forth. This one, we really want to go over some real estate lingos and investment lingos as well. So explaining a couple words that you might not know what it means, but are very important if you want to follow our conversation, know what's going on. If you're looking to buy a house, sell your house, it's all going to be lingos that are going to be used very often.
That's it. Exactly. We want everyone to be on the same page.
Yes.
We'll start early in the first podcast there. And it may be a lengthy full episode, but at least every term will be fully defined. and
we'll get
go
it
from
done.
there. Yeah.
So the first on our list are especially for investment properties. When you're looking at multi-res, you're looking at commercial offices to rent out to other people. You're really going to need to know these things. So the first one is net operating income. Net operating income, also known as NOI or NOE, it's you take your full revenue minus your expenses during the year. That's going to give you your NOI. So in that, you don't include the financing you have on it, the mortgage loan. You don't include that at all. Just, let's say for a triplex, you'll include the hydro, you'll include the property taxes, you'll include the water, or whatever maintenance you have on this place.
So those are all the expenses.
Yes.
And then you have your income as well.
Yes, that's right. So your gross income minus
All those expenses.
all
you
those
just
expenses.
numbered out.
Yes.
Okay.
Yeah. If you have other expenses, depending on the property, can change. But the main thing to keep in mind is you don't include financing or any of those in the net operating income. Then that brings us to the other one, cap rate. Basically, your cap rate calculates your investment versus the price that you're buying the property from. So let's say I have a place, So the cap rate, really for the math of it, it's the NOI, the net operating income, divided by the purchase price. That's going to give you your cap rate. Your cap rate in real estate, the highest it is, the better the investment is, but it's not always better. Let's say you have a 7% cap rate, it's not always better than a 5% cap rate, because usually the highest the cap rate is, the higher the risk. So if you look at an older building, it might have a higher cap rate than if you're looking at something brand new. Does that make sense?
Yeah, yeah, most definitely.
And then cash flow. Your cash flow depends of the people. Is to cash flow, it's whatever you have at the end of the month minus all your expenses.
That's it.
Like
The amount
everything.
of profit that you make
Exactly.
after expenses.
So
it's a return on investment, but monthly,
monthly, yeah.
reoccurring.
Yeah, well, you can look at your cash
Well,
flow
so-
yearly,
of course, it's a
whatever.
yearly cash
but
flow, yeah, but-
usually for me, when I calculate cash flow for clients, I usually calculate it monthly and let them know this is your loan amount, this is how much the property's bringing in. If we add all that together, you cash flow or you don't. It's basically it.
That's it. Exactly.
If you're in the positive, you're cash flowing. If you're in the negatives, you're not cash flowing.
It's not a good sign.
It's not a good sign, but sometimes it's a property that the lot is worth a lot. You could probably be built in the future,
Yep.
like bigger, like a high rise, something like that. So you don't cash flow currently, but you'll cash flow eventually. It's a long-term investment.
Yeah, and sometimes you won't cash flow because it's lower risk. So
That's right.
you have lower risk, then lower reward. You'll have
Exactly.
a higher reward if you go with higher risk. So it all depends with your risk app there.
For sure.
How
For
you're
sure.
able to tolerate it. Yeah.
So that's pretty much it for what we have so far regarding multi-res, investment properties, whatever. Now we'll go into more like, let's say we're listing a house. There's a couple people involved, a couple things involved. So the first one is going to be the listing agent. Listing agent will be the person that represents the seller,
That's
right?
it.
And then we have the cooperating agent. Do you want to explain that to us?
Yeah, we also have the cooperating agent. Essentially, the listing agent lists the house, promotes it, it's on market, and his goal is to sell it. A cooperating agent, his goal is to bring a buyer to
Yep.
that property. So, of course, we'll be looking at a multitude of properties until we put our finger on the right property for that specific buyer. But when we do, essentially, we're cooperating with the other party, which is the listing party, to do a transaction and exchange the real estate between those two parties.
Yeah.
Um,
They're also known as buyer agents sometimes. So
Yep, yeah.
we can refer them as that as well.
That's it. There's a multitude of different alterations, but it's very, very simple lingo. We
For
just
sure.
want to go over the terms that will be mentioned all the time on this podcast and just be sure that everyone knows them. So when you have a listing that's on market, you're going to have some showings that are going to be coming to take a look at the property. Essentially, it's very simple. Showing, you go into property, show the property to your potential buyer, take a look around the interior, point out the benefits, point out the downsides, be as clear as possible, and if you do sell it, good. There's going to be a cooperating agent. If not, you're going to be looking for one. And a listing is essentially being on market, looking to sell your property, and being promoted either by video, pictures. You have some 3D virtual walkthroughs.
Floor plans.
You have a multitude of different ways to list your property, including one which is exclusive.
Yeah.
That is not a listing that is publicly online. Typically, it's shared through word of mouth or within smaller circles.
Yeah.
Say in this office here, sometimes we do talk exclusive listings, which we fully have the right to do so, as there's an agreement between you and the seller that gives you permission to promote their exclusive listings,
Yeah.
but exclusively. It's not going to be on the MLS, the multiple listing service, which is, say, realtor.ca, your realtor website, any other website where you're going to be really publishing the pictures of the interior and all of the features and naming the amount of rooms and everything about the property.
Yeah. It's a good strategy to have exclusive listings while you get ready to hit MLS or stuff like that. Let's say for us in the office, like you've mentioned before, we share those. We're about 90 agents in the office. So when we meet bi-weekly, we share all those exclusive listings. We can sometimes
Match
match buyers and sellers before even hitting the market. So that's a huge advantage for buyers and sellers as well
Yeah.
to have those extra listings that might not even come on realtors.ca or on MLS.
That's it, exactly. I mean, it gives us a bond as well. Just a
For sure.
team. We congratulate each other for getting listings, getting opportunities. It's very nice. Another advantage of it is you can test out a price and get your fellow coworkers
Yeah.
or colleagues' opinions, right?
For sure.
So if ever I think some exclusive listing may be a little bit overpriced, but the seller wants me to try it and wants me to gauge what other realtors think, what other buyers that are currently in the market thinking. I'll send out an email to a multitude of my buyers. I think it fits their criteria, and hopefully I get some feedback. If I do get some feedback and they say, "Hey, listen, I like this place, but I think you're priced a little high, and
Yeah.
we don't want to come see it at this price." Well, you can come back with the feedback with your seller, and it's very beneficial for both of you
Yeah, for sure. That's
before
right.
listing to
Yeah.
make sure you list at the right price, right? To not make a mistake. And
Yeah, I can help you gauge that as well. There's I forgot the name of the application. There's an application for exclusive.
Oh, yeah,
listings.
Knocked?
Knocked, yeah.
yeah,
Have
yeah,
you used that before?
I have. It's really great because you can. It's essentially a listing service.
It is.
And you can add one picture of your listing and a description of the listing. And there's a multitude of agents, about 1,400 in the Ottawa region
wow.
that are on there right now. I don't know how often they do go,
For
but
sure.
that's what their marketing team has told me when I signed up. The downside now is that you can only do it for 72 hours.
Okay.
And that's for coming soons and exclusive listings.
Yeah.
We used to be able to promote it on there just forever if
Yeah.
we'd liked. There was no for the listing agreements length. But now it's only 72 hours. So that's kind of a downside. It's a lot of time to invest in a short listing for the amount of realtors there are on there. But
I think
it's
it's worth it
advantageous
to
for
have
sure.
that extra value to bring to the client.
Definitely.
Waiting to be on MLS. So, you're taking the pictures a couple days before hitting MLS. You take one picture outside, you list it on there, you get a feel of what's going on, price-wise, what's going on. And that way, once you hit MLS, you can have already some feedback of what's going on, can already be sent to clients. That way, I think it can accelerate the process a bit of feedbacks and everything, price-wise, and yeah.
Yeah, there's a lot of people in this office that actually use it.
Yeah.
I've had a showing booked on a lot that I had promoted on there.
Okay.
From that service, but it was someone from this office here.
Oh, wow.
And I hadn't had the chance to speak it out loud, but
No.
it got me a showing early, and we were able to gauge price from there.
That's right.
So we got some feedback. It's really nice. Any advantage you can take of to
Mm-hmm.
represent your clients, it's always good for realtors.
For sure. Yeah. So we've hit exclusives. Now we can hit MLS. MLS stands for multi-listing services. So usually that goes on realtors.ca, right? And a bunch of other websites, but mostly realtor.ca.
Yeah, your
is the
team's
most important
website,
one.
your personal website.
Yeah.
Yeah.
On Willow, what's it called?
Zolo.
Zolo.
Yeah.
Yeah. I know that's a popular one, so I usually just look at our MLS, but there's a bunch of listing services that's going to take that listing and show it to all their clients as well. So for maximum exposure, MLS is the way to go,
Definitely.
in
yeah.
my opinion. I think listing a house, there are some occasions where I think an exclusive listing can help, but I think MLS is usually the way to go, especially for a house.
Oh yeah, for a house,
Yeah.
for a house that's vacant, it's not tenanted. There's, or you, the owner lives in it,
Yeah.
and they're looking to liquidate it. Sometimes you'll see an exclusive because it's tenanted, and
Yeah.
they don't want
Or-
their tenants to be notified you're selling.
Or the buyers are just, the sellers are not just ready now to sell, They want it to be promoted a bit, but they don't want showings
Yeah.
continuously.
Yeah.
So I think that's one thing that exclusive can be useful for. Have it exclusive for 2 months, they get ready. And then after that, if it doesn't sell during that time period, you hit MLS once they're ready to have showings and everything like that.
That's it. And so MLS has a multitude of boards. Say in Ontario, there's a Toronto real estate board, Ottawa real estate board. For the
Rideau
Northern
Carleton.
Ontario folks out there, it's a Timmins Ontario real estate board. There's a multitude of different boards. We're both subscribed to the Ottawa real estate board. We have some fees to pay there monthly to be able to promote the properties on that multiple listing service.
Mm-hmm. That's right.
So you want to go ahead and define closing?
So essentially, closing is when you transferred the funds, the house is yours, or the house is not yours anymore, right?
Yep.
So basically, that's what it is. It's possession date. It's when you're taking the house under your name.
Yep, that's it. The transfer is done on title.
Yeah.
You now have possession of the property.
You have the keys, and you start moving.
Free to live in it.
Yeah. I think it's not more it doesn't have to be more complicated than what it is. That's basically it. Conditional period. So when we write an offer, we usually have what's called a conditional period. So for a townhouse, something like that, or just a basic house, what we're going to have usually financing. Always include financing, unless you're a cash buyer, obviously, but financing is the way to go. Always have inspection, and always have insurance. Make sure the house can be insured. Those are the three I always include. So during that time, you've made a promise that you bought the house, that you're buying the house, given that everything goes well with the conditions. So usually you'll have, for normal house, you'll have a week or two to get all that done, the inspection, the financing approved, the insurance approved. And then you can decide, do I buy the house? Do I want a price reduction? What's going on there?
Yep. And if you do buy the house, you must remove those conditions.
That's right.
And that will put an end to the conditional period that you've initially started.
Then
on average, I'd say for me is about 7 days, the conditional period. But when it's bigger properties, sometimes it can be extended for a good amount of time because there's some due diligence to be done in investment properties and whatnot. Sometimes it takes a little bit more time with rural properties. Why? You have a little bit more
properties, you'll also
inspections.
usually add well inspection. You'll add also the septic inspection. So there's a couple of more things you have to do. You need to coordinate all the inspections. So you might need more time, like you're saying, yes.
That's it.
And when you come to commercial real estate, you'll need 2 months for financing. They ask a lot of questions, a lot of documents to be provided. You might need some environmental studies for financing, so it takes a long time. So that's what the conditional period is.
Exactly, and it's to protect your interest, right?
Yeah.
If ever you're not able to fulfill a condition, hey, listen, I put in an offer at a price that's too high for me, and I'm unable to actually buy the property.
Yeah.
Well, if you don't have any conditions, you're bound to buy that property.
And you'll get sued if you don't close on it.
You're stuck there. You're gonna have to find some alternate financing or get some help, or perhaps it'll come into a lawsuit. So you don't want that to reach that point.
Absolutely not.
And here's a way to protect yourself. Get a pre-approval for the financing condition. Essentially, a pre-approval is you're going to be inquiring with either a bank or, say, a mortgage broker, which oversees a multitude of different banks, which is what I would recommend going with, as you could have a better rate theoretically. What you have to provide is what your income is, what your assets are, what is the amount of money you're sitting on for your down, as well as your expenses, your financial obligations. So we're talking any other loan you may have, a vehicle loan, if you're renting right now or something like that, some obligations that you need to pay at the moment until you do buy a property. So that pre-approval, what it does is it has the goal of giving you your clear budget. Here's your maximum budget that you can buy a property for. even if you do have a pre-approval, it's recommended to still have a financial condition. Sometimes it can be 5 days, sometimes it can be 10 days. Of course, inquire with your bank or your mortgage broker to know the amount of time they think they're going to need. And it's always good to play it conservative. So a pre-approval, just a net benefit. You have your budget. The only downside I can tell you is the credit hit that you take. What is that? 10 points maximum. Maybe it'll reach 15.
Yeah.
But it's totally worth it. If you're going to be investing into a house within the next year, you're going to have to do it anyways.
If you're a serious buyer, I think it's one thing you need to do and to really get it narrowed down. And it also helps us as realtors to really narrow down the price. That can help us go see the areas you can afford for what you're looking for. So getting a pre-approval, honestly, is the first step to buy a house, to buy anything, real estate wise, in my opinion.
Most definitely.
Yeah.
Yeah. It puts you solid, and we're able to look for the right property, like you said, in the right area, in the right budget. It's just a net benefit, like I said. What comes next after that is a mortgage.
Yeah. Do you want to define that for us?
Sure. So a mortgage essentially is a loan that you're getting. It's an amount of money that the bank is going to be giving you with a certain given interest rate, depending on what time we're at. And you're going to be doing payments on that mortgage in order to gain equity off of the property that you bought. It can be a lot, it can be a home, it can be an investment property. You're paying towards it, you're paying that mortgage. The bank is giving you that mortgage. So they're loaning you out an amount. They're saying, I have confidence you're able to do these payments. You're able to make everything work out. If you do not, this mortgage here is going to be void. We have total rights to take possession of your property and liquidate it if it does come to that. So that's the risk of taking on a mortgage.
Yeah.
The benefits, you're building equity. You're building value. You're sitting on something that theoretically goes up in value. You own something physical rather than have cash in your bank account. And you have a place to live.
That's right.
You need a place to live. So
Yeah.
if you want to rent, no problem. But of course, a house that you're owning, it has that advantage too.
Yeah, for sure. And then we need a down payment. So down payment, it's hard to know exactly what the down payment is needed. It depends of the house. It depends of a couple of things, right? But basically, a down payment is the amount of money you're going to put against the loan before buying the house, before getting the loan. So it's not in the loan. Do you want to be more clear?
Well, essentially, a down payment is to guarantee what you're borrowing, right? You
Yeah.
need to put a certain percentage, which typically it's 5%. For a first-time home buyer, it's going to be hard to accumulate more unless you have a cosigner that's willing to help you on that front. And you're putting a guarantee to the person or the bank that gives you a loan. Hey, I have some cash in my hands. You can have this deposit here. This is equity I'm putting down on my house. So say you put 5% down, you own 5% of that house at the moment.
Yeah.
Say you're paying and you've paid 3 years and now you're at 10%, you now own 10% of that house. And the down is still 5% and you've only paid 5% in payments total.
Yeah.
And well, a down payment is mandatory. It's to guarantee the bank that you're actually financially committed
Yeah.
to buying this place.
Then we have principal. Principal, basically what it is, it's part of your mortgage payment. It's whatever payment you're due that's going directly against your loan, not interest, just against the loan. So let's say you have a mortgage, you pay $1,500 a month, you have $1,000 a month in interest that you'll pay, then you'll have $500 going against the principal.
Exactly.
Basically what it is. It's the amount that's going towards the loan directly. you're owning 500 more of that house, basically. Then you want to go over equity. Equity.
Equity.
Equity.
So, equity is ownership. I have equity in my vehicle. I have equity in my home. I have equity in a stock, in a company.
In Bitcoin.
I have equity in Bitcoin. I have this is a consumable product, but as I own it in my hands, it's bought out. I own it. It's equity. Equity is ownership that you have that you're able to borrow against.
So I can borrow against my prime?
You're borrowing energy.
That's right. Shout out to Prime Energy.
So equity is essentially ownership of a property or of an asset that represents value, basically.
Do you want to go over what's an asset?
Most definitely, yeah. So an asset, once again, it's something that you can have ownership in. For example, a stock, a company, or you can have some bonds. It's an asset. Or if you're a business and you have some employees, my employee is an asset to my company, right?
Yeah.
Say that I have some vehicles under my business. My vehicles are assets of my company.
Yeah.
They're vehicles to bring me back a return on my investment. An asset is, it always has the goal of returning value on the investment.
Okay.
That's pretty much what an asset is.
Cool.
And we have big ambitions for those.
Oh, yeah. Asset Ambition Podcast. Property taxes.
So property taxes, they're a certain percentage of the amount of your house that it is worth, that you're paying in order to have some services to the township of your community.
Parks, arenas, anything for the city, right?
Streets, water hydrants,
Snow removal,
recycling,
firefighters,
garbage, everything of the like.
Yeah.
Everything of the like.
So they're very important.
Another way to view it, property taxes is an amount that's being taken away for ownership. It's taken away yearly, or you pay it quarterly, typically. Yeah. And it's taken away because you own some property that is on land that's owned by a township, basically.
Yeah.
Yeah. So say that, my property, I did the calculation this morning to actually discuss about this here. So my property is worth about, in the ballpark of $685,000 or so.
Okay.
And I'm located in Limoges. The township is Embrun, and I'm paying about $5,600 of taxes a year.
Okay.
So if I divide the amount of money that my house is worth, $680,000, divided by 5,600, that gives me 124. What is that? 124 years before the township has sucked out the energy or the money or the value of my property, basically. Of course, the value of the property is going to be going up for all those years. In 124 years, there's no way it's only worth that. Mm-hmm. That's not what I'm saying. But when you see it that way, for example, when you go in Florida, if you buy some land right on the side of the ocean, so oceanfront land, it comes with a 2% tax rate, flat out, for every land that is adjacent to the ocean. 2% means basically that in 50 years, so it has a half-life of 50 years, you'll have paid the value that you bought the land for to taxes to the municipality.
They're nice houses, though.
Yeah. Oh yeah. Oh yeah. It's not to downplay it, but it's a way to see it though.
Hmm.
And it's definitely something you need to keep into account.
Yeah, for sure.
Taxes are very, very expensive.
Yeah.
And it's a big premium to keep in mind.
It's a premium to keep in mind also when you're buying real estate as an investment. It's going to be one of your expenses you'll have on that house as well, on that property. It's going to be one of the big expenses for sure.
Oh yeah. Imagine skyscrapers in Ottawa.
Can't imagine the taxes on those.
It must be insane, you know? The people that own it, they do have a lot of equity, they have a lot of money.
For sure.
They're able to pay them, sure. But municipalities know that those guys have a lot of equity, know that they have a lot of money. So they capitalize on that and get the most energy they're able
That's
to,
right.
to draw out of it.
Yeah, that's right. Then we have closing costs. We'll just go ahead and just name a couple of closing costs. I'll go first. Lawyers. When you close on a property, whether you're the buyer or the seller, you need to have a lawyer to transfer the title and take care of the money and all that.
Pay the land transfer tax.
Yeah.
If ever there's any issues with the transfer of the property, they're going to be the ones that you're going to be paying to resolve that issue.
For sure.
Another closing cost is, well, the land transfer tax.
Yeah.
And you're going to have to forward that money over to your lawyer, and the
Yeah.
lawyer is going to be the one that commits that payment for you.
For sure. What else do we have?
Well, the down payment, we mentioned it earlier, but that's when it's being drawn to your account
That's
in your
right.
account. You give it to the lawyer again. They're the one that does the transfer to the bank to be sure that you can have the loan. But that's a closing cost that you got to keep in mind.
For sure. Yeah, that's right.
Moving costs.
Yeah.
The moving costs, it's not all that much, but say I'm coming down from Hearst. It's 10 hours from here.
Yeah.
Gas is not cheap.
Depends if you do it yourself, if you hire company as well.
Yeah, or rent out a truck, rent out a
Exactly.
trailer,
Yeah.
pay pizza to your friends at night or something like that.
Pizza and
A case
beer.
of beer, yeah. I mean, the costs add up. You got to keep in mind that when you come in your new house and it's your first time home buyer, are there drapes that come in there?
Sometimes.
Right, they're
Sometimes
there.
they're included, sometimes they're not. But there's also all the furniture, right? It's expensive to furnish a house.
Oh, yeah.
Like just a couch. You can't have a couch under 1,000. So that right there. If you need appliances, if you have a new build, usually they won't have appliances. When you're buying a used house, I guess, not a brand new build, usually will have the appliances included. Not always, but that's one thing to keep in mind. If you need to buy appliances, that's pretty expensive.
Yeah, it's pretty hefty for sure.
Yeah.
Oh, yeah.
Like for sure. Even if you go into the base models of ovens, fridge, and all that,
Washer, dryer.
it's still pretty hefty
Yeah, yeah. So
for sure.
it's not a set closing cost, but just things to keep in mind if ever it does not come with the property.
Yeah, for
Yeah,
sure.
Yeah.
Appraisal.
Sometimes you're gonna have to do an appraisal. Typically, it's gonna be when it's a commercial investment or a big investment property, and the bank wants to make sure that the house is worth what you are loaning, what they're loaning you money for, and they're gonna want to commit an appraisal. An appraisal is a formal appraisal conducted by the bank. It's not a realtor that's going to be putting its finger on a price of the property with comparables. It goes much more in depth than that. It does look at comparables, of course. It also does the cap rate calculations and a multitude of other calculations. And the banks are going to be sure, okay, I'll be loaning you this much money. Give me some time to do my due diligence.
For sure. It's the bank doing their due diligence for sure.
Yeah.
Yeah.
So what's a CMA?
CMA is. It's gonna look bad. I forgot what. It's
Comparative
market analysis. Okay, that's what I thought, but I was like, I always called it a CMA. I kind of
We're used to
forget.
the abbreviation.
Yes,
right?
that's
Yeah,
right.
yeah. Oh yeah.
CMAs we do.
Yeah, cooperating agent, co-op agent,
Yeah,
net operating income, NOI. We're just
exactly.
used to abbreviating
It
everything,
flows
but
better
for the
when
podcast here, we need to
we need to
get
be
those
on the
domains.
ball and have those all down. So basically, a CMA, or you can say it again. What is it again?
A comparative market analysis.
So a CMA. I'll call it a CMA. It's gonna go a lot faster. It's gonna be better for all of us. Basically, a CMA is we look at a house. We take that house, and then we look at what's sold around, what looks like it. Like let's say we have a neighbor has, it's basically the same house but has 4 bedrooms. You have 3 bedrooms. We'll take down the price. We'll adjust the price of that bedroom within your house to see how much you could get for your house. Basically, that's what it is. If you have a pool, we'll add money. If you have another bad bedroom, we'll add some money. If you have another bathroom, we'll add some money onto the price, and we try to get the pinpoint the perfect price. That's the goal of a CMA.
Exactly.
Does that make sense?
Yeah, we're trying to reach a price, a consensus, but based off facts,
Yeah.
based off comparable
What sold
properties
recently.
in the area, what looks like it, what feels like it, similar years, similar
Build
facts.
Build types. If we look also septics, that's one thing that's huge. If you have a house with a septic, we need to deduct that money from, let's say, a neighbor that has municipal sewers. And the land is also something we'll look into. If you have an acre, it won't be worth as much as your neighbor with 6, right?
Definitely, yeah.
So those are all things to keep in mind while doing a CMA. Then, commodity.
So let's talk about commodities. Commodities, essentially, they're a raw material that can be bought and sold.
So like a watch?
No, that's not a raw material. There's some raw materials that go in the watch, though.
Okay.
Gold,
Yeah.
silver.
Okay.
What do you have in there? Coffee, caffeine. Caffeine's is a commodity.
Okay.
Corn is a commodity. Any grain, any metal, copper, aluminum, any metal, any raw material that is used in our daily lives,
Yeah.
not by everyone, but has a pretty big market for it. They're a commodity, and they've become a commodity because there is a big market for it, and we can predict the amount that's going to be produced within a year.
Yeah.
They've been established. If ever, airplanes were invented, we need much more aluminum now.
Oh yeah.
So that commodity goes up in price. It goes up in price for a temporary amount of time. What happens then? The production of aluminum gets produced more and more. So the price comes back down, and it always equates with the amount of demand that there is in the market.
Demand.
Same as we're seeing right now in the housing market. There's the economy, it's inflated. The amount of money supply has been inflated, and it equated that the prices of houses is rising.
Yep.
What happens? More builders come around. There's money to be made. Builders are going to build houses then.
Yeah.
If there's no money to be made, a house is worth 200,000, there's no demand for it. Why would there be builders here, right? So a house is not necessarily a commodity, but it's just an example to see as soon as there's some demand, the market's going to come catch it right back up.
Yeah. Thanks for the explanation. We'll go into security. I'm not good on those things. I don't know. Well, I do know, but Matt is way better than me at explaining those, so I'll get him to explain that again.
So, a security is buying ownership. It's not necessarily buying ownership. Sorry, I'll start again. A security is a stock. It's a company. It's a crypto project. It's a business that has a CEO. It has a team. It has regulatory oversight. So say in the United States, the SEC, Security Commissions and Exchange, they oversee your company, Apple stock.
Yeah.
They oversee you. They tell you, you need to show your quarterly financials to the market to be able to be listed as a public company, to be on the market. Tesla, they need to declare how many vehicles they produce each quarter to their investors and to the whole market. Even if there's people that are not invested in their security, they must do a quarterly report reporting, hey, this is how much we're producing.
Okay.
Here's a random cryptocurrency that some have heard of, Dogecoin. Dogecoin has a team. They have a leader, a CEO.
Okay.
They have a team that's under the CEO. They have decisions to make, and those decisions impact the price or the value of their security.
But for crypto, how does a crypto gain value? That's what I don't understand.
Well,
Crypto is a world that I don't understand because in my head, it's nothing. It's like you were explaining to me it's in the universe and like whatever.
yeah. Well, where are you?
Where's your security?
Where are you when you're on Instagram on Reels?
On my phone?
And where is that? It's in the digital world,
Yeah.
right? So those securities and cryptocurrencies are in the digital world.
But why do they
And-
own in the digital world?
Dogecoin, what do they own?
Yeah.
They own the power of the meme. Bitcoin, what do you own? You own a small percentage of a block in a digital city.
Okay.
Ethereum,
But
what do you own? You
What's
own
a block in a digital city?
A block in a digital city is, I'll explain Bitcoin, for example.
Yeah.
Bitcoin has 21 million issued Bitcoins, and they're being mined at the moment. To see the digital city, view it as 276 blocks wide, 276 blocks high, 276 blocks deep. That's the city. It's a big block, the square root of 21 million. And that's divisible by any amount. And when you go in a smaller amount, it's called a Satoshi and not a Bitcoin. And it's like saying I have 50 cents. It's called a cent. It's not a dollar anymore, right? It needs a different term to say I'm a small percentage of a dollar. Okay? So a digital property, say that you buy one Bitcoin, you have one of these 21 million blocks. Say that you buy a Satoshi, which is worth on any given day, perhaps 50 cents or so at the moment, Canadian dollar. That's a small percentage of one of those blocks in that digital square, essentially.
Okay.
So that's what this cryptocurrency is. It's ownership of a block that is digitally located in cyberspace, which it is called. Cyberspace is where you're at when you're scrolling Reels. It's where you're at when you're watching YouTube. It's where you're at when you're streaming. You're in a virtual world, right, at that point. So streaming, videos, Amazon Audible, that's transference of digital information. Audible is transference of books digitally. Amazon is transference of the front store on the main street in Manhattan, but online. Is the digitization of Starbucks on your street corner. Is the digitization of whatever consumable product that you're able to buy online and have it shipped to your place. Google is the digitization of going to a library and looking into a book to find the answer to your question. Meta is the digitization of going into Times Square and talking to everybody that is there. And there's a different personality there. There's a different personality there. They express themselves how they want. Everyone's there. Everyone has an account. Everyone's there physically. But in Meta, everyone's there digitally. If you have a digital world, you need digital money. You need digital ownership, right? There needs to be a city, or there needs to be a place that you can invest to store your economic value. There needs to be a place. In the world here in Manhattan, Town Square, you can buy a building there. You're storing your capital physically.
You have something, but that's what I don't understand about Bitcoins and stuff like that. If you invest in a stock, and like let's say in Apple, there's a company, there's phones, they build stuff, you know?
Yeah.
They have the technology, all that. They can gain value by doing more, right? If you have real estate, you have something like you can help make bigger. Let's say you can renovate it, gain more value that way. That's what I don't understand about Bitcoin, because it's all digitally. So like there's nothing physical about it.
Let me give you an example. Say that you're in Nigeria.
Yeah.
Which real estate are you going to buy in Nigeria?
I don't know.
Are you going to want to buy a building in the middle of the biggest town in Nigeria? I don't think so. Their currency is not worth much. Their currency has hyperinflation. They're using the colonial franc, which is the France economy. They don't have their own economy. It went away because it got inflated. Bitcoin has a set cap, 21 million. You can't change that. You buy into a protocol that everyone agrees upon. You cannot change it. You have proof of ownership, as there's every single one that's in the Bitcoin sphere. They're verifying that your transaction is truthful. Right now, when you're going to CIBC here in Canada,
Yeah.
I send you over an e-transfer, $50.
Yeah.
If I send you an e-transfer, I tell CIBC I want to send money over to NOAA,
Yeah.
but you're at Scotiabank. So it goes from CIBC to the Canadian bank, to the Canadian bank under NOAA's account, to Scotiabank, to NOAA's account.
Okay.
If I have Bitcoin, I have Mathieu Jacques' account, NOAA's account.
So you can
1 to
just
1.
transfer me like
1 to 1.
1-to-1.
Yeah, 1 to 1. So I have a wallet that's associated to my name, or not even. You can remain anonymous. You don't even need it to be associated to your name if you don't want it to be.
Okay.
And you can transfer that all the way to England, China, United States, anywhere. You can transfer it in the time to say it, just very, very quickly, to anyone in the whole world, 1 to 1. There's no bank there to take away a small percentage. For example, you're going to Subway, you're going to get a Subway at lunch today. You're paying with a card. 2.5% of that transaction goes to MasterCard, if you have a MasterCard. I send you Bitcoin, none of it goes to anyone. We're not losing energy. We still have energy. But if ever you do 50 transactions on at Subway, 100% of what you say, I have a $50 and I trade it with you,
Yep.
a total of 10 times, it's gone. 2.5% taken all the time, it's gone. MasterCard has taken it all away because we're using their service. If we're buying into Bitcoin, we're not using that service. We're not using any centralized service.
So do you think in the future we'll see more businesses take Bitcoins and crypto as payments?
I think so. I think it's going to be a long time. It has to develop. It has to go through an adaptation phase. But some U.S. businesses have already started adapting to it.
I believe Tesla, right?
Tesla, they've invested over $250 million into it, and they take payments in Bitcoin. For big transactions, there's some real estate transactions being done in the States through Bitcoin.
Oh, wow.
To buy yachts, big companies have adapted to it because some people that have a lot of Bitcoin, they're able to buy some yachts. But what currency can they buy it in? They have a lot of Bitcoin. Do they have a lot of dollars? No, they have a lot of Bitcoin. So they want to be able to sell it to them. But more and more, you're going to be able to buy smaller and smaller goods with that.
So I'll be able to go to Subway and get my foot long.
I'm unsure if that's going to be viable. The reason is that you're buying property, and property is a store of value. The goal is not to be able to spend it.
Yeah.
It's to be able to trade it. So when you buy a house, you want to buy a Subway, you can't say, take my house and I'll have 50,000 Subways, right? It's you're buying ownership of property. You can trade it. You can trade it. Say, I want to sell it. It's the easiest property to sell. I want to sell my house tomorrow. It's going to be hard to sell it tomorrow.
That's right.
I want to sell it tomorrow. Tomorrow's a Saturday. I can sell Bitcoin on a Saturday. Can I sell Tesla stock on a Saturday? Nope. Banks are not open. I can't sell it. I need to hold it all the way to Monday. If I want to sell it on Sunday, I can sell it on Sunday. At 3 a.m., I can sell it. There's going to be a market for Bitcoin at 3 a.m. Why? There's some people that don't even have currencies. There's a country, it's called El Salvador. Their country, they have fully crashed their economy. They had to inflate their money as they've had a revolution there in the recent years. And they needed to transfer to Bitcoin as a main currency because it's a currency that goes up in value. You can't print more. If you can't print more, you can't have hyperinflation. You actually have deflation in the long run, which is amazing.
Yeah.
It's revolutionizing. And as I said, there's been transferation of information in the digital world. But I think what's next is money. I think economics are going to be transferred digitally. I think that's the next big wave.
We won't see any more cash. Is that what you're saying?
How often do you see? Well, I mean, you do see some right now. If you're a waiter, if you deliver, if you have tips, you see some right now. If you wouldn't see tips, how often would you see cash today?
Well, me personally, I always have cash. I always pay often with cash. But like if I look at anyone else, you're right that they don't have cash.
You see it less and less.
Less and less, sure. That's right.
Less and less. I see some businesses, they don't even accept cash. Sometimes they have a sign.
No cash.
They say, we don't take cash.
We went to Subway yesterday and they wouldn't take a $100 bill.
Yeah.
Yeah.
What does that mean? That means a business does not even hold cash.
That's right.
That's pretty much what it means. They're saying, I don't have change for your big bills.
Yeah.
I don't have change. It's all in the digital exchange.
Mm-hmm. Well, that was a great conversation. We almost got everything down on our list, but time's up. If we look at the time, no more time remaining, unfortunately. That was a fun conversation.
Yeah, it was a really great podcast. Yeah, I liked it. I hope that that cleared up some terms for you watchers out there. For
sure. I think
we want to be fully clear when we discuss, and we're going to be discussing assets more in depth like this. And I love talking about Bitcoin. If you like to listen about Bitcoin, I'm going to be bringing that subject for sure often on the podcast. I love it. If you have more questions about it, I'd be glad to answer them. I want to practice myself, and explaining it helps me understanding it more.
That's good.
I for sure don't know everything. And we got 3 more terms. We'll probably go over them in the next podcast.
Yeah.
And if ever you have some terms that you want to find, you watchers out there, reach out. We'd be glad to explain.
More than happy to help.
Yeah, more than happy to help.
That's right. All right. Thank you.
Okay.
And we'll see you guys next time.
Thank you for watching.
Ciao.